This week has been the first week of a new career course at Axia. So we've had 1 week, new guys coming in, various different discussions, and the first week is about just building people's technical understanding. But it's brought up some very, very common discussions and some very common sort of traits of new traders. I'll just illustrate one for you. Now, one of these is the focus or the too narrow a focus on the very short term. Traders get sucked into individual chart patterns. They start spotting flags and pennants, and all of these things will work. But where you notice the difference between those who are coming in new and then if you talk to a senior trader on the floor is the approach and the sequence of that approach. New traders, and we've discussed some really good trades and well executed trades, but new traders come in and start with the setup first. They look at the flag and they go, right, here's a flag, I can play it, and treat it as a scalp trade. So it becomes a little scalp. And they may make 10 ticks out of a trade. And there's nothing wrong with that. But what they don't do is necessarily appreciate that this could lead to a much, much bigger play. We broke down one this morning, a small 1 minute S&P flag, and this quick break. And one of the guys took it, very nicely done, good reason, good explanation for entry and target. But once I pulled the chart out and said, well, look at this on an hourly chart and look at where your entry is and what that leads you towards, it all of a sudden opens up this trade not being worth 4 handles. All of a sudden, it's worth 20. And it's about the appreciation of starting from the big picture and scaling down onto the smaller time frame. Those smaller time frame setups work, but you need to be using them at the right time rather than trading every single setup. So use your flag, use your head and shoulders, but at a point where you've already got an idea of what you're looking for the market to do, as opposed to just trade them every single one that you see. That's where you lose edge. That's where your edge just purely comes down to probability of a certain setup working more often than it doesn't. If you can see what the wider structure is, then you use your flag as essentially a tool to play that move, to accurately get your entry spot on, and to make sure that you've got a tightly managed risk on a trade that you can then scale because the scope of that trade is so much bigger. It's not to say don't go scalping, it's to say don't go scalping when there's an opportunity for a much larger directional move, looking at a larger time frame. It's a classic trait from newer traders, and what we'll now be doing over the next couple of weeks on the course is moving towards a greater degree of context, bringing in profiles to start to understand market concepts, market context of what can happen, and then bringing in order flow to further enhance people's entry to trades. So that's the progression that we're going to see over the next couple of weeks. And we'll start seeing more and more of the short-term trades turned into much bigger half an hour, 2 hour trades. It's not really long-term, but it's long-term for a day trader. So that's the progress. That's where we're going next. If you're interested in joining the next career course, click on the link, go and have a look at the website, see what the course will provide you, and we'll see you on the next course.